Good morning. Welcome to Forex Pro Charts discussion of the weekly trade results for the week of March the 6th that ended March the 12th, 2011. We had three currencies that saw action this week, so let's go ahead and take a look at them. Okay, the first currency that we're looking at is the Euro GBP, and this is a currency that a lot of people don't trade. One of the things to remember about it is that the value of a pip on the Euro GBP is much higher than the value of a pip on some other currencies, so that if you have a gain, you make more than you would normally expect, and if you have a loss, you lose more than you would normally expect. So that is something that traders always need to keep in mind. But as you can see this week, price moved up into the zone beginning at 85.97 very nicely. Hit the daily armpit and bounced. So those who trade the daily armpit saw a nice little profit here. Then price eventually went ahead and moved on up to the 60-minute armpit, which is at 86.38. Now you can see that initially it bounced, and this was for 21 pips. So those of you who trade our recommended trade setup would have had at least that portion of your trade complete. Now, let's see if we can see it in a little more detail. It's hard to tell here because of the position of the trend line, but when price came back up here, it stopped just short of the 60-minute armpit and then moved all the way back down. So those of you, depending on how you manage your trade, if you bring your stop down to break even, depending on your spread and exactly where you had your stop set and your entry set, you probably stopped out here. But if you bring your stop down to just short to allow for this kind of action, and we've discussed this at length over the last month or so about the phenomenon where we see on the hourly chart, we see price move away, then come back up, and then move away long term, and talked about bringing your stop down, not directly to break even immediately, but to just short of break even to allow for the spread if price just does come up right back up to this area or just short. So if you do that, then you would have stayed in the trade and you would have had a gain in total of 104 pips. I believe that this was the lowest point that price hit prior to moving back up. And then as we saw earlier, don't know if we'll get that on this chart. Nope, I'm not going to be able to get it back in. Anyway, price then had moved back up and is now approaching the 5-minute armpit, and we'll see what price does this week. But if you follow our recommended trade setup, you would have at least gotten the 20 pips on the initial setup, and many of you will have gotten on your second and third portions will have gotten 100 pips. So that was a very nice little trade this week. Okay, now let's take a look at the GJ. Now here we see where price was below the zone at 134.71, came up into that zone and spiked through the 60-minute armpit, but not through the zone, went right up to the trend wall, and then came back down. This was not last week, but was late the previous week, on the 4th. So this was on Friday of the previous week. So I'm discussing this now. Price moved down very nicely. I believe here it was at about 100 pips when price moved down here. Many of you would have taken profits at this point because of the trend wall and because of the left behind targets, and because we were approaching this dead zone here. And then as you see, price for a little while meandered along. Now, if you're in the habit of leaving the final portion of your trade open and just leaving that stop at break even to see how far price goes, you were rewarded this time as price began to move back down. Then you see here, this is where we had the major news event this week, of the major unscheduled news event this week of the earthquake and the tsunami. And you can see here that then price dropped very rapidly, moved through this zone, spiked down through this zone, which we have cross-hatched, before moving back up. So I want to take a look down here as well, but I will use a precautionary statement here. In evaluating behavior at this zone, when you have a major news event like this, we recommend extreme caution. And none of us here at Forex Pro Charts took this trade on the 60-minute armpit. The GJ is a volatile currency anyway, and with these news events going on, there and the size of the risk, there was a over 100 pip risk here on this 60-minute armpit, and none of us were willing to take that trade. And this is the evaluation that you have to make yourself as a trader, and not just automatically assume that because there's a 60-minute armpit you can take the trade. And price did move down here. Even if you go to the 5-minute chart, price did not bounce at all. It just moved straight down. Now we did have one trader take a trade on the 5-minute armpit here at Forex Pro Charts, because they felt that within their trading plan the risk was acceptable to them and they were willing to do it. So they traded this 5-minute armpit, and you can see that price did bounce on the 5-minute armpit and then move back up to the daily armpit before moving down, spiking down. And actually I consider this kind of a bounce off of this weekly armpit right here, and then price reversed as things began to stabilize a little bit, or as the news began to stabilize. But while price can move very rapidly, and if it's moving in your direction, that can be a very good thing, still in these kinds of events, I think back to the large, it was about a year ago when the stock market just dropped like a ton of bricks one afternoon and just shocked everybody. It was a major deal, and the currency markets also reacted. And at that point, we saw several pairs drop through 2 or 3 zones without stopping and without taking any bounces. It did eventually stop, as this did, in or around a zone and reverse back. So the zones can give you possible areas where that drop will stop. But because of the unpredictability of the price action, it really is too risky to trade. And we would recommend extreme caution with the JPY pairs again this week, especially given the unstable situation with their nuclear power plants over there. So anyway, here again, if you had traded the 5-minute armpit, you would have seen a bounce. If you had traded the 60-minute armpit, which we did not post an alert, we did not recommend this trade, you would have had a loss at this point. That's that's why it's important to always evaluate your trades based on the current circumstances. Even if you set entry orders up, it's good to keep an eye on the news, on the situation, and evaluate those entry orders if you can, as prior to them actually taking effect. We're also going to go ahead and take a look at the UJ, because we saw we did have the UJ hit a zone at the end of the week. So let's go ahead and take a look at that as well. Okay, so here we are looking at the UJ, and you can see here where price, based on the news, had the same rapid drop and did drop into this newly formed support zone, moved all the way down to the 5-minute armpit. And again, none of us at Forex Pro Charts traded the 60-minute armpit. We did not post an alert, did not trade it because of the volatility of the news. As it happened here, we had a 5-minute armpit and a trend wall. And so much as with the GJ, we saw a bounce off that 5-minute armpit. And it was late enough in the day that we have not seen if this bounce will continue and price is going to reverse and move back up, or if price is going to fall again when the market opens. So most of our traders did not trade this. If you traded the 5-minute armpit, you would have seen a gain of about 27 pips so far. Again, enough to lock in profits on the first portion of your trade, but also again, given the news going on at the time, a very risky trade that most of our traders would not have wanted to take. And we'll see what happens with price this week. Again, exercise caution and really protect yourself, and be prepared for it. Be sure that you're willing to take any losses on trades, given the volatility of the situation in Japan and the likelihood of some other kind of unexpected news event in that area. So that was the results for this week. Again, the EG had 100 pips. The GJ had up to 400 pips from the trade that actually began the very, very end of the prior week. And depending on where you stopped, you could have had anywhere from 200 to 400 pips, depending on how you managed your trade. And then we have that open trade with the UJ for anybody who may have taken that. But that trade, because we did not post a trade alert on it, we're not including that in our trade results, but just wanted to discuss it to show, because I wanted to make that point about the unexpected news events. So, for more information about Forex Pro Charts, or to subscribe to our full analysis and charting services, where we analyze 10 pair of major currency every week and post trade alerts when currencies enter the zone and approach the 60-minute armpit, you can go to our website, www.forexprocharts.com. You can sign up for a free week-long demo of our services, and we look forward to seeing you there and look forward to seeing you back next week. Good luck trading.